So I thought that we were going to roll off the PEP program, the existing pandemic program, back into one of the previous existing QE programs. But now that there's talk of something new. What's the story here?
So basically, Anna, policymakers are very much concerned that spreads will widen when large-scale asset purchases stop. Obviously, the PEP is scheduled to run out at the end of March. It's currently running at about 70 billion a month, plus 20 billion a month on the older program. So there is a lot that the ECB is buying each month. When that program stops, there is the risk that investors are getting a bit concerned that the ECB is away from the market, and so policymakers are looking for that little bit of insurance to assure those investors that they have nothing to fear, that there is no reasons for spreads to blow out, and that's why they're looking at ways to how to achieve that. I should say no decision has been taken on this, so people are studying options, looking into this. This is one thing that they're looking at, and what I find interesting is that we've waited for so long and the decision has been pushed out for so long. We're hoping to hear more about what's happening later next year at the ECB's December meeting. So still a few weeks to go on that one.
As you say, we've already kind of pushed this so long, extended so long. Why don't they just continue extending the program? Why do they feel the obligation to kind of transform it into something slightly different, but with a different name, but essentially the same kind of program?
Well, the PEP, as the pandemic program is dubbed, has a very specific purpose. It is a crisis tool. It's an emergency measure. It's very flexible. And it was meant to get the economy and inflation back to where it was before the pandemic hit, so that to restore the trend that we have seen at the start of last year. And it looks like the program has achieved that. Inflation pressures are rising. I'm not talking about the spike we're seeing now that's driven by oil and a whole range of other temporary factors, but the underlying price pressures, they are rising. If you look at ECB forecasts, they are more or less in the area of what we saw at the start of last year. So now it is really about leaving the crisis behind and focusing on the actual work of bringing inflation back to 2%. And there is a feeling that you cannot stretch crisis instruments for a whole lot longer than they're welcome.